In this video, we're going to talk about 7 best penny stocks to buy in 2022. Before starting, do like the video and subscribe to this channel for future updates. It was stated that Warren Buffett went on a purchasing binge in May 2022. It's not shocking that the renowned investor has been profiting from current market circumstances. There seem to be many possibilities to acquire stocks at a discount, whether they are large capitalization equities or potentially multi-bagger penny stocks. Having said that, I must point out that it's impossible to anticipate multiple-fold returns in only a few weeks or even months in penny stocks, as we did during the surge that began in March 2020. Those were particular circumstances. With an investing horizon of 12 to 24 months, there are certain multi-bagger penny stocks that are interesting to examine. Multi-fold profits from these stocks seem possible during this time. My primary interest is in penny stocks with strong fundamentals. Holding these stocks won't keep investors up at night. Importantly, penny stocks should only make up a modest fraction of an investment's portfolio. Being overweight safer, large cap companies make sense in an unsteady macroeconomic climate. But let's speak about 7 possible multi-bagger penny stocks, since they represent the riskier portion of a well-diversified portfolio. 7. Uranium Energy UEC. Uranium Energy, NYSE UEC stock, is worthwhile to purchase as one of the top owners of uranium resources in North America. In the last 6 months, the stock has either traded in a range or declined, but it appears that a breakout to the upside is just around the corner. Europe is attempting to lessen its reliance on Russian energy. One strategy to lessen this reliance on energy is nuclear power. The demand for uranium is anticipated to stay high over the coming 10 years, and Uranium Energy is well positioned to profit from this. The company has $127 million in cash and liquid assets, which is important to note. A balance sheet without any debt gives room for rapid expansion. Recently, the business paid $112 million in cash to buy Uranium One. Physical uranium reserves totaling 5 million pounds already exist within the corporation. The mine is also capable of producing 6.8 million pounds annually and is ready for production. The UEC stock is one of the most likely multi-bagger penny stocks due to its robust resource base and favorable industry prospects. Number 6, Arrival, ARVL. Stocks of electric vehicles have recently experienced significant corrections in general. A few of the cases have included chip shortages and inflation worries. However, I think that these brief setbacks offer investors in electric cars stocks a fantastic chance to buy. One of the possible multi-bagger penny stocks from the EV industry is Arrival. There will probably be some relief after a correction of 78% in 6 months. Arrival has in fact been running behind schedule, and this is a major factor in the correction, but it appears that the business is finally getting closer to production. The stock price can increase as a result of this. Arrival anticipates starting UK bus production in the second part of 2022. Additionally, Arrival anticipates that van production will start in Charlotte in Q4 2022 and in Bicester in Q3 2022. In total, 400 to 600 vans are anticipated to be manufactured in 2022. I'm optimistic about ARVL stock due to its distinct micro-factory strategy, beginning of production, and order backlog of 143,000 vehicles. Number 5, RIOT Blockchain. RIOT. The best moment to buy a stock or investment theme is when there is blood on the streets. The same is true for cryptocurrency stocks and Bitcoin, BTC USD. Of course, I'd stay away from a serious plunge. Several cryptocurrencies and crypto stocks, however, can offer multifold gains if views change. Therefore, RIOT Blockchain is on my list of multi-bagger penny stocks to purchase, even though I may be stretching the concept a little, as the stock is currently slightly above $5. In the past 6 months, the price of Bitcoin miner has dropped by 75%. It's a fantastic moment to buy given the company's aspirations to expand its mining operations. To put things in context, RIOT can hash at a rate of 4.6 EHS at the moment. However, The business anticipates increasing the hashing capacity to 12.6 EHS by January 2023 with the deployment of miners. This would suggest a multiple-fold increase in the quality of Bitcoin mined during the ensuing quarters. EBITDA margin is going to undergo a severe compression soon. However, the significant correction ignores this element. RIOT appears to be in a strong position to weather the turbulent times with over $100 million in cash and digital assets. Number 4, Mullen Automotive, MULN. Over a year, the price of Mullen Automotive shares have fallen by 90%. However, it appears that more good news is in the works, and the price of MULN stock makes it worthwhile to purchase. Mullen has already detailed successful outcomes with the business's solid-state polymer battery. Additionally, the business has acquired $275 million in new capital with a $61 million cash reserve already in place. The business is ideally situated to make product development investments. The business had previously revealed that a Fortune 500 corporation had ordered vans in March 2022. Although there hasn't been a new update in a while, it might be a catalyst soon. It's important to note that Mullen has submitted 130 patent applications for its Mullen 5 EV crossover in 24 different nations. The company has innovation at its main priority. Returns may be multiplied if correct steps are taken to continue the progress. Number 3, New Gold NGD. I continue to be bullish on gold despite aggressive rate increases. Real interest rates are still negative, which is one factor. Additionally, the likelihood of a recession and elevated geopolitical tensions are supportive factors for gold. A possible multi-bagger penny stock from the gold mining industry is New Gold. NYSE American NGD. With a 9.1 projected price-to-earnings ratio, NGD stock appears to be a good investment. In summary, the company is entirely focused on Canada, has $326 million in cash and equivalents, and has deposits of copper, silver, and gold. Additionally, the corporation has an undrawn credit facility worth $376 million. There's plenty of room for pursuing rapid growth. In fact, the business anticipates continued growth in gold production through 2027. Strong cash flow potential is possible if gold moves higher over the coming years. The corporation recorded operating cash flows of $66 million for the first quarter of 2022. This already suggests a possible annualized OCF of more than $260 million. Overall, with an investment horizon of 18 to 24 months, NGD stock is worthwhile to examine at current levels. Number 2, Transocean rig. With economic fears, oil has experienced some pullback from highs. A significant fall, however, doesn't appear plausible given the geopolitical risk premium in oil prices. Transocean NYSE rig seems like a top selection among energy penny stocks. The stock just corrected, and this offers a solid opportunity for accumulation. I have 2 reasons to be optimistic about rig stock. First and foremost, rig day rates have been on the rise as a result of rising oil prices. The company's EBITDA margin and cash flow potential will probably increase with new contracts. Transocean still has 12 rigs that are cold stacked. These rigs will probably be contracted in the upcoming quarters, barring any negative changes to the market environment. This makes potential income growth visible. It's also important to note that Transocean has a substantial $6.1 billion backlog of orders. There is a clear path to increased revenue with a backlog that is front-end heavy. Transocean plans to reduce its debt by $3 billion over the following few years while anticipating robust cash flows. Overall, the medium-term potential for value growth in rig stock appears to be undervalued. Number 1, Tilray Brands, TLYR. Cannabis legalization at the federal level appears to be taking longer than anticipated. However, Tilray Brands appears appealing following a significant fall. Tilray has been expanding its market share by making acquisitions. The business has established itself in important markets like the United States and other nations in Europe. Additionally, Tilray reiterated its forecast, calling for $4 billion in revenue by 2024. If regulatory obstacles disappear, this appears feasible. If cannabis is legalized, the U.S. market might reach $57 billion by 2030 and even more. It's important to note that Tilray has a significant presence in both medical and recreational cannabis. The business recently increased the range of medical cannabis to offer in the UK. The long-term outlook appears promising when evidence-based medications are prioritized. Over the next 18 to 24 months, TLRY stock might generate gains that are multiples of its present level of $3.59. So what do you think about our video? Let us know in the comment box below. If you could, please do like the video and subscribe to this channel for all future updates.